Hello, and welcome to the Mission Driven Business Podcast. I'm your host, Brian Thompson. I'm an attorney and certified financial planner who created a successful financial planning firm serving LGBTQ entrepreneurs. Now, I'm on a mission to help others build their own businesses with purpose and profit. On Mission Driven Business, you'll hear from diverse entrepreneurs and the people who support them. You'll get practical advice and a little motivation to help you build your own business with impact and profit, maybe even change the world. Hey everyone, welcome back to the Mission Driven Business Podcast. I'm your host, Brian Thompson, and we're coming to the end of tax season. I've been noticing some really interesting trends across my clients this year. So today, I wanted to walk you through what I'm seeing, because your tax return is not just something to file and forget. It's actually trying to tell you something. I've had two clients this season that really stood out. One is a high-income business owner who usually owes a significant amount every year. But this year, their tax bill dropped significantly. Another client was able to itemize deductions for the first time ever, despite not having any mortgage interest. In both cases, the reason was the same: changes to the state and local tax, or SALT, deduction. We'll talk about this a little later, but zooming out, these moments are why I think this time of year is so valuable. If you're paying attention, your tax return gives you a roadmap for what to do better this coming year. So today, I'm going to walk you through a few things. The biggest trends that I'm seeing, what they actually mean, and what you should be doing differently. Let's dive in. Let's start with what's causing the most stress: unexpected tax outcomes. Thankfully, many business owners were surprised in a good way this year. They either owed less than expected or got a larger refund. While most are happy about that, I always give the same reminder. A refund is not a reward. A tax bill is not a punishment. It's just a reconciliation of what you owe or have already paid. It also may tell you where your planning didn't match reality, so it's best to try to estimate your taxes based on what you know about your current income. Another big one this year: increased interest and dividend income. A lot of folks had significant investment gains or moved cash into high-yield savings, CDs, and money markets. While the gains are great, that windfall increases your tax bill if it's in a brokerage or a bank account. So for some people, that meant extra income they didn't plan for, and in some cases, penalties. So a quick reminder: you have to look at all of your income when calculating your estimates. And speaking of estimates, I've also seen more underpayment penalties, especially for you self-employed folks. This happens even for people who make their estimates, but may not do so on time or in incorrect amounts. If your income increased this year, but your estimated payments didn't, the IRS will catch up with you, so make sure to plan accordingly. Now for the upside, where people are leaving money on the table. Let's go back to those client stories. One client owed a lot less, another could itemize for the very first time. This is all because of the SALT deduction that increased from $10,000 to $40,000. That's a huge shift for high-income earners in high-tax states like California, DC, and New York. But most people aren't planning around it yet, since we're all experiencing this for the first time. So this is your opportunity to get proactive. Depending on your situation, there may be strategies around the timing of payments or entity-level tax elections. But that only works if you plan ahead. Another big one: retirement contributions. A lot of business owners are not maximizing solo 401ks or SEP IRAs. Or they don't realize that they can still contribute until the filing deadline. These accounts reduce your taxable income and build long-term wealth, yet they're often overlooked. Don't let that be you. Another area I'm seeing a lot of confusion is self-employed health insurance and HSA contributions. I've seen people miss these deductions entirely or owe money back unexpectedly. Again, this is where proactive planning makes a huge difference. Make sure to review your Schedule 1 to ensure you're making the most of your deductions. Lastly, I want to talk about what's happening behind the scenes, because this is the root of a lot of these issues. I'll keep it simple. Your tax return is only as good as your books. If your bookkeeping is messy, you miss deductions, you make worse decisions, and tax season becomes super stressful. Clean books, on the other hand, make everything easier. The tax planning, the cash flow, strategic deductions, this is foundational. And if your books were in tip-top shape this year, take the time after tax season to get everything in order. So if we zoom out, here's the big idea. Your tax return is trying to tell you something: where you were surprised, where you missed opportunities, and where your systems need work. The goal is not to file the return and move on. The goal is to learn from it. Build, measure, learn. Here's what I want you to do. Take 30 minutes and review your tax return with this question: what surprised me and why? Was it a higher tax bill? A missed deduction? Something you didn't understand? Every surprise is something you can fix next year. And while I know it's tempting not to review the documents when someone else prepares them, you are ultimately responsible for what you sign. And saying, "My tax preparer told me to do this," doesn't prevent penalties. If this episode was helpful, share it with another business owner, especially someone in your community who's trying to figure this out on their own. The more we understand our numbers, the more we can build businesses that actually support our lives. Thanks for being here, and as always, keep building your mission-driven business. Until next time. Don't miss an episode by subscribing to Mission Driven Business on Spotify, Apple Podcasts, or any other listening platform. Thanks for listening. Until next time.